Yesterday, U.S. stocks tanked across the board. Dow Jones fell 739.42 points, 1.56% to 46,677. 85 first break below 47,000, 2026 new low. Nasdaq fell about 404 points, minus 1.78% to approximately 22,312, biggest drop. Tech hit hardest. All 11 S&P sectors mostly down, energy relatively resilient or small pullback. Poor breadth, nearly 70% stocks fell. Russell 2000 down approximately to 0.1%. Core driver, U.S.-Iran war escalation and Hormuz Strait supply disruption. Fears. Main causes multi-source verified. 1. U.S.-Iran war escalation and Hormuz Strait supply disruption fears dominant factor. Iran attacks tankers. Dubai, Oman facilities threatens continued closure of Hormuz global approximately 20% oil transit. IEA confirms largest ever oil supply disruption impacts 7.5% global supply. Despite 400 meters barrel reserves release, panic persists. Oil surge. Brent settles over $100. Barrel intraday plus 101 plus. WTI sharply up. Boost inflation expectations, stagflation fears, slowing growth plus rising inflation. Fed rate cut path blocked, high oil equals sticky inflation. Growth, tech, high valuation sectors highly sensitive to rate rises. Inflation and rate expectations worsen. Oil surge reinforces stagflation narrative. Treasury yields volatile higher 10-year spike. Market sharply reduces. Fed 2026 rate cut expectations higher for longer. Further crushes valuations. Other secondary, overlay factors. Geopolitical uncertainty persists, conflict in second week. No end signal. New Supreme Leader vows to keep Strait closed. Some earnings, e.g. Adobe, or sector rotation. Limited impact. Dominant driver remains oil plus geopolitics. Overall market shifts from quick resolution fantasy to prolonged plus supply disruption reality. Next U.S. stock outlook short midterm. Short term next week to month end, volatility remains high. VIX near 4-year high. Risk off continues dominant. If oil holds $100 plus, inflation pressure persists. Growth. Tech sectors under pressure, Nasdaq likely new lows. Defensive rotation intensifies. Energy XLE, etc. Defense LNT, RTX, etc. may outperform or hold. Utilities, staples become safe havens. Key triggers. U.S. Navy escort start, energy sexes possible month end. Trump further comments if hints quick end. Iran response. Any de-escalation signal could trigger fast oil pullback plus stock V-shaped rebound. Midterm April-June. Depends on conflict length. If prolonged months, stagflation risk rises. Fed delays cuts at least hold to June or later. Stocks may continue volatile down. Value, defensive, energy relatively resilient. Small caps domestic-oriented potential rotation. If quick de-escalation, ceasefire, oil falls, inflation expectations ease, yields down. Growth, tech SPI high rebound probability, Nasdaq back strong. Overall, market from extreme fear to cautious divergence. Geopolitics remains biggest variable. March 17 to 18 Fed meeting likely holds rates 3.50% to 3.75%. SEP rate cut expectations may further cut.